Hi everybody, it's TJ with the 7 Summits Trader Pro. I thought I'd do a walkthrough. I haven't done one for a while. I've been focusing on creating new trade plans. New members should by now be deeply involved with learning the system, hopefully joining us in the trade room. For those of you who are not able to join us, hopefully this walkthrough will help you. I want to look at several markets, and we'll also look at MT4. Let's start with the Euro US. Speaking of MT4, let me just roll back to the beginning of our session today. It was an unusual session because of all the news releases coming out, and with a lot of ECB talk and interest rates being left unchanged over there in Europe, and Draghi with his press conference and speaking throughout the day. And it did cause some movement in the market. Sometimes it could cause the markets to be choppy. Other times you can get some pretty good sized moves because the market's going to react with every single syllable that comes out of his mouth, just like it would here when Bernanke is speaking. Let's just walk through this, okay? Right here at 8:30, this would normally be our start time, and the unemployment report came out. So we're going to wait 5 minutes, and that occurs after the next bar right here. Okay, you can see 8:35, we've waited 5 minutes, and all of a sudden we get the setup, obviously, and we have to pay attention to it. It moves down and it touches the entry, and the entry is at 26073. So I'm going to use that extra digit and just round it down to 2607. Okay, and we get filled within the same bar. I mean, it's moving really good in our direction here, and you'll notice if you look really carefully right here, the stop moved down and locked in a pip. Now all of this happened intra-bar. I don't like to move my stop on the Euro US until the bar closes, but we do want to reduce risk. And the stop was up here, it hadn't had a chance to move down yet. So once we move down through the first target and move lower, I like to move my stop as an interim cautionary step just above either this bar here or the trigger line, a key level hopefully. So we got 2620, we're just above the high of this bar and the trigger line. So moving your stop to 2621 is a nice interim place to move your stop. Okay, then when the bar closes, we have the option to lock in our pip. That's what the trade plan says. Or if it's a little too tight and we still need to give the trade room, we can continue to work around the trigger line. So you got to be a trader and manage the trade, but you also have to stay within the spirit of the SST and within the trade plan. And the trade plan wants us cutting risk and eliminating risk. Okay? So let's see. The bar closed, and now we have the option of locking in or continuing to work around the trigger line. And either way, it really depends on your own risk tolerance. I'm more inclined to lock in my pip because that's my own risk tolerance, and I would move it down to 2606. Okay? And if you did that, once this bar closed, you can see that it did come up and spike through. Got to 26066, and it would have stopped us out for a 1 pip gain. If you had left it working around the trigger line, 2 pips above the trigger line, you would have survived, and you would have actually had a move down, and you would have hit your full target to here. So maybe it's worth leaving a few pips of risk on the trade to give it more room. Okay, that happens a lot. You have to make that decision, and it's good to just go with one way or another. We've had a lot of break-even trades this year. It's also been a factor of keeping the result of this trade plan growing. Meanwhile, there was an add-on trade right here. And that add-on trade triggered in, okay, we had our stop here, and ultimately it stayed in, and it worked its way down and hit its money management, and we did the exact same thing. Right here when it hit the money management, we didn't know what was going to come next. We moved our stop down and worked around the trigger line. Okay, you could have even left it up above that little swing level. But working around the trigger line I think is a good compromise. Then when the bar closed, we moved our stop down, locked in the pip, and it stopped out. So 2 trades that only made a single pip each, barely enough to cover spread. Basically 2 break-even trades. That's okay, you take them 1 trade at a time. Later in the session, we got a long trade. It set up at 10:05 right after the ISM report came out. 5, 10, 15, 20, 25, 30. A half hour later, finally triggered in. Meanwhile, the stop was moving up, 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 up. That risk getting smaller and smaller. When it triggered in, it went right past the first target. Now, this first target is too small to lock in a pip until you have gotten some movement to the upside, and that's because of the SST Pro working around the key level and adjusting up above the 2600 level. So it borrows a little bit from our trade objective, from our profit objective, in order to add extra confirmation for the entry. That's okay. We're just going to work that stop around the trigger line like I've been talking about. Meanwhile, an add-on trade occurred, and you could add your position again right here, and you manage each stop independently. That one also got to money management, and you could see that it got to the full target. So when this bar closed, right here, we moved our stop up to break even. It continued up. We hit the full target. That was good for 27 pips. The add-on trade triggered in, and that one also we had to work a little bit around key levels and kind of finesse the stop because you see how close it is. But ultimately, we locked in a pip, and that one stopped out for another break even. So 3 break evens and a 27 pip winner. And then, of course, the trailer on the original position got all the way up to 26.24. So that was another 22 pip. Actually, it went even higher than that because you're basing it on the close of each bar. So it got as high as 26.29. So that was a 27 pip winner also. So both positions, 27 pips. So 54 pips on the day. Not bad, but it required patience. It required managing each trade independently and just being a professional trader, trading each trade one by one, sticking with the trade plan, locking in 54 pips. Now, how did this fare on MT4? As you know, with Forex, every broker's different, and you have to trade your charts. So if you're trading MT4, you would have had a nice session also, but it would have turned out a bit different. Let's take a look. All right, so here's the example on MT4. Let me make the OSOB a little smaller. All right, first of all, let me point out to people that MT4 is not going to give you the cool colors that we get with TradeStation. It's not possible. They only allow us 8 inputs, and we had to make a decision between colors versus different trade functionality so that the SST Pro calculator would work the same. And we chose the functionality over colors. So it's really important if you're learning the SST Pro that you learn what the setups are, because then you could look at the OSOB and you're going to know if it's a basic setup or a reversal setup or an add-on or re-entry. You're going to know all that based on the OSOB. So you don't really need the colors. The colors would be nice, but they're just not possible with MT4. So I would suggest that you take advantage of the TradeStation deal and get TradeStation for free for 6 months. And you can go ahead and use TradeStation charts. They give Forex data for free. And you could base your trade decisions off of the TradeStation charts and place your trades through your broker, whoever that may be. I do that all the time. I use TradeStation. I still trade through Owanda and the MT4 platform. But you could also use your MT4 charts. You're just not going to get the nice colors. But the setups are the same. So let's walk through it. I mean, the trades will be different because the broker's different, but the setups work the same. Okay, that's something that you have to realize. You're not losing anything as far as the SST Pro setups. A basic is still going to require the OSOB going below the 0 line for a short, for example. This is actually a reversal trade. This one here goes below the orange line. Okay, that's just how it would be on TradeStation. The next setup bar is actually at 8:30. The timestamp on these bars comes at the beginning of the 5-minute time bar, whereas on TradeStation the timestamp represents the close of the bar 5 minutes later. Okay, so you have to remember that. It's different on MT4. So when I click on this bar, it says 8:30, but when the bar finishes, it's going to be 8:35. And so that trade triggers in, and you can take that trade. And it comes all the way down past money management, and you got to finesse your stop just like we did with TradeStation. let me just change the look of our trigger line so it looks the same. Like so. Okay. So the stop moves down to here. You see? So you got to move your stop. Once that bar closes, you could lock in your pip. And then it stops out on the next bar. And so you get a get Bob setup. You also have an add-on trade. The add-on trade is no longer an add-on trade because once it stops out, it just becomes the next setup. It's a basic setup. And how do you know that? Well, because the OSOB is below 0. Okay, so that's the next trade, and that one triggers in as well. Okay, now you can either add the get Bob as an add-on, or you can ignore the get Bob because you just got in to the other trade. The get Bob is totally optional, and I wouldn't recommend trading it until you've had some experience with it. Sometimes you're going to want it. Sometimes you could use it to add your position, but it's completely optional and you don't need to. So what happens here? The get Bob also triggers in. You could tell it's a get Bob by looking at the setup. Notice that all the targets are equal distant. That's how the get Bob targeting is. The traditional trade plan we're using has some custom targeting. Okay? Just like on TradeStation. So you got different stops as well. Meanwhile, you've got both trades, the stops are holding. They separate a little bit, and then it stabs down and it hits the first target on the basic trade, and the stop moves down to lock in a pip. Okay, the stop moves down on get Bob as well because it's using the target mode 2 or trade setup mode 2 trailing scheme with the incremental. So it moves down. But it moves up, and you know, just like on TradeStation, we had to stop out with a 1 pip gain on the basic setup. Okay? The get Bob trade ends up taking a small loss. Stops out right here. Right here. But we get the same reversal trade to the long side that we did on TradeStation. That one goes to the distance to full target. We also get the add-on trade, and that one goes the distance to full target. Remember on TradeStation, we stopped out with 1 pip? Well, on MT4, you got the full target on both those positions. Then the trailer on both positions moved up, moved up, moved up, moved all the way to here. And so you ended up picking up additional profit, almost a full target on the original reversal, but also additional profit on the add-on as well. So while you might have had a small loss on the get Bob, you picked up 2 full winners and additional profit on the trailers on the subsequent trades. I didn't do the math on this, but I would suspect that it was slightly better than the 54 pips we got on TradeStation. But either way, it was a great session. And it was merely knowing the trade plan, following it, understanding the limitations of the platform, but not fretting over it. The SST is the SST is the SST. The setups work. You just have to know how to take them and then place that trade. All right, so there's a good walkthrough on the Euro US today. And hopefully it helps. If there's any questions, let me know. I'm in the trade room every day. Come on in, ask your questions. And then I will put some more other videos up too. I'm going to go through crude oil and the Russell, which also were 2 really good sessions today. All right, so check back, and I'll see you on the next one.